Hello, good people. This is Darrell with Personal Credit Solutions, and definitely want to welcome you to the video. As you know, the purpose of our YouTube channel is to provide credit education to our clients and to help them better understand the credit repair process. So always remember that bad credit is temporary. Anyone can have good credit in good time. So we're going to talk about a very broad topic today: credit, debt, and collections. It's going to take us about 4 videos to get through this, so we're going to try to keep them as short as we can so you can get a good understanding. I don't do videos just to do videos. I do videos because these are the questions that I get asked on a regular basis. This is the information that I see is needed that many people don't have. As always, many of you have a lot of this information, know a lot of this stuff. That's totally fine. I'd say about 75 to 80% of my clientele does not know all of this information in detail. This is helpful to you guys, so we definitely want to make sure we get it out to you. So like I said, we're going to talk about credit, debt, and collections. Some of the laws are going to be in effect here as well. I do want to let you guys know, as you see here, this phone number, I don't get a lot of calls here, but this is our office line. It's a line we advertise with, so on our Facebook, YouTube, Instagram, and video channels, everything that we do in marketing, we'll be using that phone number. So some of you are not aware of that number. Some people call and they're confused by that number. So just to let you know. So part one, we're going to talk about credit and debt collections, right? Who needs credit and why? Let's talk about that. If you do not have cash to pay for everything, then you know you need credit. We all know about credit. We know what it is. We know it's needed to pay for things in installments, right? Or partially over time. We also need credit for convenience. We need credit to boost your credit scores, to purchase vehicles, to obtain credit cards. Of course, we know we need it for home purchases. A lot of us don't know that you do need it for insurance as well. Okay, insurance requires credit now. I've been in business 25 years, and I'd say the last 10, 15 years is when insurance companies became very serious about checking your credit before they even allowed you to, give you the insurance that you're requesting. So, we need it for vehicles, right? Rentals are very tough to get without credit. And also nowadays, something new since I've been in business is to obtain jobs. So as we can see, it's really very important. We know that. All right, what's in a credit report? Your credit reports contain the most personal information about you. As we know, your name, your address, your social, your date of birth. Your job information is on your credit report. Some of us don't know that. It is definitely there. Your credit scores, we know those are important. I do want to remind you guys, long as you're working with me, I don't want you to fall in love with the credit scores. It's not just me. We put too much emphasis on credit scores, and half the time we're not even getting the correct credit scores because we're getting Vantage scores from Credit Karma and our credit cards like Capital One and some of our banks. I do know many do offer FICO scores, but just focus on your FICO score. All right. Any information on the way you pay your bills. I mean, if we look at credit, what is credit? What is credit? Let's look at the actual definition. Let's take a look at that. Credibility. Capable of being believed, believable, a credit statement. Worthy of belief or confidence, trustworthy, a credible witness. Credibility is important. If you use credible sources, you can believe them as your readers can believe. Now, I didn't use a financial definition of credibility because I want to be basic with this. Listen, we have to understand that our credit tells people who we are. It tells people about our willingness to pay. Let's be honest, sometimes people have problems, right? A divorce can change a credible person. Anything like sickness or layoffs. So sometimes it's out of our control. That's why we're given the opportunity to rebuild our credit. But credibility is important, and I want everyone to start thinking about how they're being looked at. Make sure that the message that you're giving your creditors is that you are willing to pay your debts. What is a credit score? Let's talk about that a little bit. A lot of emphasis is put on credit scores by my clients. I see you guys are putting all your emphasis on credit scores. My scores haven't gone up. What's going on with my scores? Your scores are based primarily on your positive credit accounts and your pay history. Credit scores are a calculation of the information that appears on your credit report. This is how well you pay your debts. So that score is a factor of how well you pay your debts based on those 5 topics that we all know about, right? The pay history, utilization on your credit cards, length of time you had a credit account, credit mix and inquiries. Those 5 things are what your score is based on. Your score is not as important in the credit repair process as getting the negatives off your credit. Absolutely, your score is important. Of course, your score is important, but it's not as important as your history. When you're repairing your credit, what you really want to see is negatives coming off your credit, and that will allow you the opportunity to get more credit once you have those negatives removed, right? Credit scores range between that 350 and 900. They're different models. What you want to know is that anything between 450 to 550 is really, really poor credit. All right, you'll either probably get turned down on a regular basis, have high interest. You'll have that rate gouging that goes on in the car industry where they give you a very high rate and a very high down payment. This will make your payments higher as well. The credit score range that you want to be in is right here, the 640 to 720. Okay, that's where we want to be. That will get you the best interest rates. So that's what you want to be focusing on, is getting your scores to that point. Yes, we know that, let's get a little laser here. Yes, we know that you should be able to get positive credit with those scores. So keep that in mind. The higher the rate, the lower the interest, the lower the risk. Excuse me, the higher the scores, the lower the rate and the risk. So creditors, of course, are willing to deal with you. We know the higher the score, the better, right? What is bad credit? Well, bad credit is when you have those scores that are between 350 and 580. I just gave a general range. Sometimes you can't get anything with a 600. Okay, but you definitely want to consider bad score to be under 600. It's going to prevent you from getting jobs in some industries that deal with money or finances. You can be turned down for loans and even insurance. So do you have any of these things on your report? These are the items. There's 9 of them listed here. Okay, so we have 9. Actually, there's 10 items here. Public records and tax liens are in the same category, right? Public records includes tax liens, judgments, bankruptcies, even foreclosures, which are not listed here, would be considered in the public records. So these are the accounts that we want to make sure we don't have. Yes, we know if you have a bankruptcy, that's going to be there a while. We are working a bankruptcy program that is really good, so we're going to be pulling that out as soon as we get some good results from some of the test clients that we're working on. I will tell you that there are some things that even if we get off your credit, which happens often, we're talking about child support, alimony, which is not listed here. You know, I don't think I can spell that really good with this thing, but alimony is not dischargeable in bankruptcy, and it's also a public record, so that's going to be in the courthouse. Now, alimony, child support, you also have student loans and taxes. These are the things that you can't discharge. You can't get out of them. Not even with the bankruptcy. You can't get out of them. You're going to have options of getting these off your credit, which I've never seen alimony on the credit reports. These can come off your credit, but they still have to be dealt with. My method is to help people get their student loans in the rehab program. I'm going to tell you, you still have to pay your child support. You have to work it out with the court system. It does not have to be on your credit, but it does have to be taken care of. And we all know that taxes will do garnishments on your payroll check. They also put liens on your bank account. So we definitely want to make sure we take care of those. How long can bad credit stay on your report? Well, I'm just going to try to get through this quick because I'm already at 9 minutes. So we're going to finish this up with just a couple of more slides. But if you look at the majority of your negatives are going to be allowed to stay on your credit for 7 years. Now, Chapter 7 bankruptcy is when you get rid of everything. You discharge everything, you're left with a zero balance, right? And the chapter, it should be 13 here. Let's change that to 13. The Chapter 13 is when you work out a plan to pay your creditors back, right? You'll pay on that from anywhere from 3 to 5 years. And you'll pay back maybe a portion of your debt. You will not pay back all the debt that you defaulted on. You'll wind up paying around 25 to 50% of your debt. This can stay on your credit. Actually, Chapter 13 is coming up here. There it is there. So this can stay on your credit for 7 years if you pay everything off, okay? So a Chapter 13 will stay on your credit 7 years if you pay all your creditors back and you complete the process. Otherwise, you will wind up having that remain for 10 years. So a Chapter 13 can remain on your credit for 10 years. And this is called a dismissed Chapter 13. I'm not going to write that in there, but a Chapter 13 would be dismissed if you didn't pay it, okay? So if you don't pay that Chapter 13, it will go to a dismissed status. Now, Chapter 7 is for personal bankruptcy. 11 and 12 are business bankruptcies, so we really don't need to talk about those much. So these are all discharging all your debt. They stay on there for 10 years. Chapter 13 stays on your credit for 7 years if you pay it out. If you dismiss it and don't pay it out, you're going to wind up paying on that, seeing that Chapter 13 remain on your credit for 10 years. All right, unless, of course, you do something about it. And when we say that, we're talking about, having your credit repaired is the best way to turn this around. You got to ask yourself, why do credit repair companies continue to exist? Because it works. So keep that in mind. All right, so good credit is what we're shooting for. When you have good credit, creditors want to see those scores between 650 and 720. Great credit reports are 720 and above. Usually don't see people get into the 800s much. I have seen a few people get into the 800s, but 800s are not what your goal should be. It's not a realistic goal. With 800s comes many years of credit history, comes with having a very large mix of accounts. When we say mix, we mean, do you have the different types of credit accounts that are out there? Do you have personal loans, auto loans, mortgages, credit cards, credit lines? These types of things are what they're looking for. You have to have a really long history to get into the 800s, and your credit ratio is going to need to be excellent. I'm not saying it's not possible. I'm saying for right now, get the great credit scores. What's wrong with great credit scores? Excellent credit scores are definitely the way you want to go, and you want to gravitate towards those excellent credit scores. You want that great history as well. The history, in my opinion, is more important than your scores, because if you have a good history, you're going to have good scores. But the thing is, when your history is good, you're telling the bank that you're credible, and that's when the bank is willing to lend you money, not necessarily on your scores. How many creditors don't judge you by your scores? There are many, many, many creditors that don't judge you by your scores, okay? So just keep that in mind. Your history is the most important. Pay your bills on time. We know this is important. You need to have a perfect pay history for 24 months to be looked at as a very credible borrower. Be able to obtain loans, vehicles, and jobs by doing that. And of course, what's the best thing about it? You're going to feel better. You're going to have more confidence, and you're not going to be embarrassed about your credit. So that is going to be the end of part one. We have 4 parts to this series. So that's the end of part one. I want to thank you guys for watching and learning and beginning that process of educating yourself so you can be better with your credit. And we'll be back shortly with the second video.